Hello everybody, welcome to another video. In this video we're going to go over how you can utilize the economic calendar to your advantage. Specifically, high impact news events, red folder news events that occur weekly. And you are to be aware of these events so you can locate them on the charts. I'm going to show you what to look for and how you can leverage it to your advantage to get these highly accurate trades. So without further ado, let's get into it. What is the basis of this model, of this data liquidity model? Well, the requirements are high impact news, CPI, PPI, consumer sentiment, etc., whatever the high impact news event may be. And you wait to see if that news event is volatile. Does it have an effect? Does it have a profound jump in the market? If you see that upon the drop of this news event, the market makes a volatile move, you are to mark the high and low of that news driving candle. You can go to the 1 minute and mark the high and low. Mark the high as data high, mark the low as data low. And what you're going to do is wait for price to sweep one end of that news driving candle and reverse. Now, price can sweep one end of this data news event candle and it can go beyond it. What does this mean? If news drops at 10 a.m. and we form this highly volatile candle, and let's say we have the data low and data high marked, and price goes to data low, and then beyond it, it goes to sweep sell side liquidity, and then begins to reverse. That's a possibility, and then you can catch that reversal in the direction upwards, or vice versa. And so when price takes one end of that data candle, you look to see if it reverses from that point, and form an entry targeting the other end of that news driving candle. And so you go on the lower time frame, find that entry and target the data high or low, whatever it may be. Now, why this model? Why does this work? Well, after high impact news, retail stop losses will be located at these data highs or lows. And so the algorithm knows this and targets it. And so your job is to wait for one side to be swept and target the other side. And so the algorithm is brutally designed to do this. And so you can take advantage of these moves. Whenever high impact news days drop, whenever there's high impact news, red folder news, and it has a profound effect, you can utilize this to your advantage. And more times than not, it will pan out. All right, so here's an example of this model in action, locating the high impact news event in the charts and then formulating the trade around it. So as you can see here on this day at 10 a.m. we have high impact news, red folder, consumer sentiment at 10 a.m. here. And so to this point we go on the 1 minute and wait for that news event to drop. We wait to see if it has some effect here. Typically what you'll get, and you won't see it here because it's not live, but typically what you'll see is a spike in price, whether it's a spike up, spike down. So in that 1 minute candle, the spike will occur in like the first 3 seconds of that candle. And that'll show you that, okay, there's an influx of volatility here. And so in this event, we form here the data high and the data low. And so what we'll wait for is price to take one side and then target the other. But price can definitely come and take one side and go beyond it, like I've mentioned, and come take out sell side or take out buy side and then return to that data high or low. And so what do we see price do here? Price comes, takes the data low, but we go beyond it. We go way beyond it and we come and we take out this sell side right here, all while leaving the data high behind. So we have sell side here that has been swept, but we left behind the data high. And so that's still in play. Just because we've gone beyond the data high or data low doesn't mean necessarily that it's not in play anymore. So we've gone, taken data low, left data high behind, gone much lower, but it's still in play. Why? Well, number one, we have generated liquidity here. Look at the liquidity we've generated. This high here, 1, 2, 3, 4, 5, 6, 7 highs here on the way down, taking out this sell side. So we have generated liquidity here that price can draw towards, as well as this data high from that consumer sentiment news event. And so we do have reason to expect price to head higher. And so we form this bullish gap here. we form this bullish gap here. And so off that sweep of sell side, we come reverse here, inverse this bearish gap right here, form two bullish gaps here, and you can enter here targeting the data high. And so you get the 10 a.m. news, price takes one side of it, goes beyond its sweep sell side, all while leaving the other end of the data news event behind, which is the data high here of consumer sentiment, with clear objectives on the way up, generated liquidity here. So the basis of the trade is valid. There are objectives to the upside as well as that data high to come take. So you enter off the retest. That's exactly it. And we'll see what price does to this point. And there you go. Price goes 106 points around all the way to that data high surrounding this model with that 10 a.m. high impact news. Generated liquidity here. Lots of objectives that we could come take out. Sweep of sell side, reversal, inverse this bearish gap. Two bullish gaps form here, retest, entry. Objectives here, data high, targeted. Very nice move using this model and using the economic calendar to your advantage. Alright, so here's another example of how you can utilize that economic calendar to your advantage. On this given date, we have non-farm payroll at 8:15. So we have high impact news then. It is a pretty volatile news event. And so given this, we're going to wait for that news event to reveal its hand. And as you can see, look at that. Very volatile 1 minute candle there. And so you could form the data high right here. And then the data low right here. So we have our data high and data low marked out. We have the clear objectives there. And I want to see what price does here. Do we come and take out one end? We've taken out the data low. And as you can see, we do go beyond it now. So again, we're going beyond that data low. And what do we come do? Well, we come and take out all of this low resistance liquidity right here. We come and sweep sell side right here. And look at all these lows. This is a clear target for price to come take out. This is clear objectives here. So again, no surprise that we come and take out these lows as well. So we came and take out these lows here, but we've left the data high behind. So the data high is still a valid area for price to return to. Why? Because people that traded this news event and that got into shorts here, their stop losses are likely situated around here. And so the algorithm knows this and it will come back to target it more times than not. And so we're going to wait here to see, does price show us something that is worth taking now? So we've swept sell side, taken data low, data high has been left behind. So do we have a trade to take? Well, number one, we may potentially inverse this gap right here. So let's see what price does here. So yes, we inverse this gap as well as form this bullish fair value gap here. So yes, we do have a potential entry here. So we have this bullish fair value gap here, as well as this inverse fair value gap here. We inverse this bearish gap here, displacing this swing point, break of structure there, off that sweep of sell side with clear data high to the upside. So you can enter off there. And so you do have the basis for your trade here, targeting the data high. And so this is how you can take these trades time and time again to your advantage, targeting that data high. And so clear objective to the upside, sweep of sell side here, reversal, inverse this bearish gap, form this bullish gap, displace this swing high here, and we have the clear objectives to the upside that we can target. So we look to see what price does here. We hold this inverse gap here. Targets are still valid here to come take. And you can see price comes and takes out the data high. And so very nice move there, around 61 points to that data high. And that's how you utilize the economic calendar to your advantage. This area will be returned to more times than not when you have high impact news events that are quite influential. And so we come and take that low, we go beyond it, we form that reversal, and you enter targeting that data high. And so this is how you can utilize the economic calendar to your advantage time and time again. So I hope this was insightful. I wish you good luck, good trading, and take care, everybody.